Good evening, friends. Welcome to Adda 24/7 Cracker series. Now, this Cracker series is MCQ series for CAIIB, both ABM and BFM, as well as retail if the time permit. Because ABM and BFM are very important. Why? Because this is the last batch for December. Remember, this is very important sentence. This is the last batch with the current portion. Next year your portion will be changing, so join this year. This is a new English batch which we have started, paid batch. So join this batch as fast as possible. Okay, it's starting on August 8th 2022. Okay, August 8th evening 8 p.m. So join this batch. Okay, so let's move on with the series. Yeah, say this: all revenues received, loans raised, money received in payment of loans by union government go into. So whatever revenue is received by the government from loans raised, money received from repayment of loans, basically these are all capital payments, isn't it? So it goes into which account? Okay. Before that, important part which is there, download Adda 24/7 app on your mobile. Also, join Officers Adda 24/7 YouTube channel. On this app, you'll get all the study material, live lectures, tests, online queries, query resolution, everything you'll get it over here. Similarly, this series is going on Officers Adda 24/7 YouTube channel. So join this, subscribe this, and press the bell icon. Okay. So where does this money go? All money received, loans raised, and money received in payments of loans by union government goes into which account does it go into? Yes, which account? Public account, contingency account, consolidated fund account, and none of the above. So which one? Public account or this consolidated or here definitely not contingency, because contingency fund is totally different. Contingency fund is for some problems, means some COVID like situation whichever arise. So okay, so B is out. Okay, now A, D, check out D, none of the above, that is also out. Now which account? Public account of India or consolidated fund of India? Now amongst this, which one? Take either A or C. Which one? Fast. Which one do you think is the correct answer? Public account or consolidated? Okay. Firstly, let's understand each part over here. Okay. Before going ahead, so I would suggest you here. Public account. What is public accounts department? Means what is public accounts actually? What does it comprise? Public accounts is a committee, right? Yeah, we have public accounts committee that is generally for audit. Okay, so the correct answer is consolidated fund of in India. Okay, of India, in India you can call anything, consolidated fund of India or in India. Okay, so that is the correct answer. C. Which one of the following is not directly the concern of the economist? Means what? Economist means what? What is an economist? Economist means that person who deals in economic principles and laws. Okay, so what are the points which the economist will consider? Choices will not consider. Okay, we are here for not. Choices relating to location of a steel plant, means economist. Why should the economist be concerned about all this, right? So economists will be concerned about the economics of the plant. Okay, but not the location and all those technicalities. Okay, so that is out. Bargaining between workers unions and the employers, again, is this a problem of the economist? Is this the role of the economist basically? So that is also out, right? Because this is a term to be dealt with by the management. Effects of change in money supply, okay, and imposition of tax to discourage cigarette smoking. Okay, so should we impose, or what happens if the tax is imposed to discourage cigarette smoking? So this, either this C or D. See here, both of them seem to be correct. If the answer would have been both C and D, then you would have definitely ticked that, but we have to choose between these two now. Okay, so which one do you choose, C or D? Fast, C or D? Why? Because here to discourage, here the concept is discouraging the cigarette smoking. That is not the job of the economist basically. Okay, imposition of tax can be the job of the economist, but to discourage cigarette smoking, that can't be that is not a job of the economist. Here again I am telling you, if the answer would have been C and D combined, then we would have ticked on that only. But when you have to choose between the two, choose the most apt or most optimum solution. So what is the optimum solution? This one. Okay, effect of change in money supply. Okay, next one. Customs duties, export duties, corporation taxes, taxes on capital value of assets, excluding agricultural land of individuals and companies are. So, what is this? What are these taxes? So, customs duties, export duties. This here, all these are. Do you remember when we taught revenue and capital budget, right? So, revenue part. These are all the part of revenue income for the government. So taxes and duties levied by center but wholly appropriated by the states means levied by center but appropriated. Appropriated means collected, okay, or used basically. Taxes and duties levied by center but collected by the states, okay. So export duties, corporation taxes, taxes on capital value of assets, okay. So these are collected by states. Let's see. Taxes and duties that accrue wholly to the union government. So all these directly go to the union government. No state is involved in this. Is it that? Taxes levied and collected by the union but which are shared with the states. So are these taxes shared with the states? Okay, so take either of these two, these four. All of these four seem to be correct ones. Okay, so which do you think is the correct one? Let's see. Okay, which one do you think is the correct one? Yeah. Is it center wholly appropriated? Appropriated means what? Appropriated means used. Okay, used by, given to the states. Second, collected by the states. So see here, remember this appropriated word is used for GST over here. Okay, and collected by the states is the stamp duty. Remember, stamp duty, stamp. Okay, stamp duty is given by central government but collected by state government. This is GST. GST is collected by central government but given to states as well. Taxes and duties that accrue wholly to the union government. Now this is important. Wholly to the union government. Now this, all the money of the customs, exports, corporation, everything goes directly to the government. So the correct answer is C. Okay. Remember this part. This is a this part of the tax directly goes to the central government. See here, GST goes to central government, but it is distributed among the states. Stamp duty is imposed by the center but collected by the states. Okay, and this part is imposed by the center and collected by the center only. Okay, next. Funded debt means. So what do you mean by funded debt? What is debt basically? Debt means what? You take some loan from somebody and pay interest on that. That's the simple logic. Okay, so what is funded debt then? Funded debt means, okay, all government securities which are marketable on stock exchange market. Okay, all private securities, shares of the companies and Kisan Vikas Patras. Now which of these? Okay, I know many of you might be thinking, okay, first you answer. Let me check how many of you answer correctly. Funded debt, okay, all government securities which are marketable on the stock exchange market. So all the government securities which are marketable on the stock exchange market. So are the government securities marketable on the stock exchange market? That is the point. Firstly, remember, government securities, many of you will say, okay, this is the correct answer. Why? Because A seems to be big one. So this, remember, this logic does not apply in CAIIB. In CAIIB, the biggest answer is not the correct answer. Okay, so the correct point, or let me explain this part to you first. All government securities which are marketable on stock exchange. So are the securities, government securities, marketable on stock exchange? See here, of course, remember, there is on stock exchange, these are not marketable. Stock exchange means stock, shares, right? Only that. But remember, NSE also has a different market for government securities. So if the answer would have been on exchange only, on the exchange market, okay, then it would have been correct. But stock exchange is wrong. Okay, but remember, for debt securities also there is a separate market. Okay, that's called as FIMDA. Okay, all private securities, it has nothing to do with private securities. Okay, shares of the companies, here we are talking only of the government. Okay, government. So shares of the companies, again private out, okay, and this stock exchange out. So Kisan Vikas Patra, because this is the funded debt. What do you mean by this? Why Kisan Vikas Patra is the funded debt? Has anyone seen Kisan Vikas Patra? Type yes if you have seen Kisan Vikas Patra in your life now. I know this modern bankers, means these who have joined 5-6 years back, have never seen Kisan Vikas Patra to that effect. Okay, or even national savings certificates, Kisan Vikas Patra, and many others were there. Now all these things are fading. Okay, but remember, what is this? These are the securities which were given by government. Okay, these were of the government. They were given by the government to common people with an investment of minimum of something. I think 5,000 was the minimum investment at that time. Okay, so it is basically a security. Okay, government used to take money and give you those papers. After 5 years they used to give you that principal back, similar to that of the bonds. Okay, annual financial statement is another name of balance of payment, fiscal budget, debt and credit, debit and credit, you can call it debit and credit, or debt and debit and credit. So annual financial statement is what? Has anyone seen annual financial statement over here? Have you seen it ever in your life? Yes, we see it every year. Okay, government presents the budget every year, so that is annual financial statement. Not only government, even the private companies present the budget. Even you as an individual, you have a appraisal every year, right? What is that appraisal? Annual financial statement, isn't it? For companies it's called as budget, for government also it's called as budget. And the in companies we give the balance sheet basically. Okay, and AGM is done for that. Okay, so important point, for government it is called as budget, only budget. Here, what are these other names then? Fiscal budget, balance of payment, debit and credit. Here, debit and credit is out. Debit and credit means what? What is debit and what is credit? Simple logic, right? Does anyone remember this debit and credit rule? Accounts. Okay, credit what goes out, credit what, credit the giver, credit the gains, right? And debit the reverse ones. Okay, so that was the JAIIB. Remember, you will require this in ABM also now. Okay, because you have ratio analysis topic in ABM also. Okay, next one, what is balance of payment? This I have already covered in my earlier lectures also. There are two things: balance of trade, right? BOT we'll call it, and BOP, right? BOP. Balance of trade is what? Export and import. That's only export and import. Balance of payment means what? Net. See here, net of this comes in over here, final answer of this, plus other things are there, means one NRI sends the money, FDI coming in, all these things. Okay, so remember, BOP is the bigger part, BOT is the smaller part. BOT only consists of business, it's like a current account. Okay, fiscal budget. Here, fiscal budget is different part. Fiscal means what? Financial, related to government spending, it's all. Okay, so this is a part of the budget. So B is a part of the C. Okay, multi-currency basket means, what is this multi-currency? Remember, does anyone remember this word LIBOR? Has anyone? You might have heard this word, right? LIBOR. Those who are in Forex or in JAIIB also, you might have studied this. Okay, London Interbank Offer Rate. Okay, so what is this? Why is this multi-currency basket? I asked this question of LIBOR in this part itself. See here, I'll tell you the reason. LIBOR is a rate on which we fix the dollar rates. Okay, all the banks in the world fix the dollar rates. But let me ask you one question. If tomorrow something happens in London, some uprising goes on, the government fails, banking system fails, then who will give you the dollar rates? London banks are gone. London interbank banks are gone. So where is interbank remaining then? Okay, so those banks are gone. So where will you get the dollar rate then? How will you trade then? In dollar and various currencies, not only dollar. Okay, how will you get it then? So that's why RBI has introduced this system of multi-currency basket. Okay, instead of LIBOR, RBI has given a choice to all the banks to fix their rates not only on LIBOR but on multi-currency basket. Okay, what is multi-currency baskets here? Just referring to LIBOR is not enough, RBI says. you refer to various countries and various, they have given some 6 rates on 6 countries and 6 rates, okay. So you base your dollar rates on various currencies. It's means there are various currencies. I've taken it separately in my classes, okay. So your dollar rate or your currency rate will be based on all these. Means it doesn't mean now I'll go for this country also, that country also. 6 countries are given over there. It doesn't mean that I'll base my rate every day on those 6 countries. Understand this? RBI has told, if you want, then you go for any of these currencies. 6 are there. Any of these 6 currencies you can go and fix your rates on that. Okay, so that's the multi-currency basket. So what is that? Relationship with the World Bank, currency plus coins, number of major international currencies to which the external value of the Indian rupee will be linked. Okay, and none of the above. So now I already gave you the answer. The correct answer is obviously C, isn't it? Okay. Firstly, I would again say like this video. Everyone like this video and type your answers in the comment section. First do that, okay, please, because what happens once you like the video, then the buffering of this live video is proper. The number of views and number of likes, if they are same, then the buffering is the best. Okay, so like it as fast as possible. Which of the following is not a selective credit control? Now selective credit control means what? Okay, let's see. Rationalizing of credit, open market observations, open market operations, it should be not observations, operations, OMO, right? Open market operations, changes in SLR and ANC, means both A and C. So which one of them is not the correct answer, or no, which one of these is not a selective credit control? We want not a selective credit control, okay. So which one? Rationalizing of credit, okay, open market operations, okay, and changes in SLR. We want not. So and A and C both. So what do you think? It should not be a selective credit control. Okay. Firstly, what is selective credit control? Tell me, what is selective credit control? Let's see this, okay. Selective, I'll type it. We'll see it live, okay. Selective, yeah, see this. I'll show you live over here. I'll read it over here. The selective credit control is the discriminatory policy, okay, is the discriminatory policy of RBI in favor of or against certain sectors in the economy. Means what? It is in favor or against certain sectors. So it's a discriminatory policy. Remember this, discriminatory. Remember, okay. Discriminatory policy means what? What is discriminatory policy? See here, it's like this. Suppose let me give you an example of this. Yeah, what? Realty sector means construction. So remember, RBI always says loans to builders are, what do you think, the loans to your builders in your bank, are the rates same as that of the common public, or are they higher? They are higher. Why? Okay, one more example. Loans to goldsmiths. See here, loan to goldsmith for purchase of all that gold. So are the rates higher or are the rates same as that of the common public? They are higher. Why? RBI says that, let me give you an example of this builder, okay, property. RBI says this builder gets double funding. Why? When you book a flat, what do you do? While booking a flat, what do? We give 10% to the builder when we have that floor, foundation, then 10% when we have that wall. Means what? This builder is getting the money, or that property builder is getting the money from you, and also he is taking a loan from the bank for the same work. So he is getting a double funding. So in that case, RBI says this applies selective credit control. So don't give loans to those sectors, okay, or give it with caution. So that is selective credit control. So which is not a selective credit control? Not. Remember, some books give, I have seen certain books which mark as A and C. mean these are not the credit selective credit controls. Okay, so this is not the right answer. A and C is not the right answer. Correct answer is rationalization of credit or OMO. OMO is what? What is OMO? OMO is separate topic altogether. OMO has nothing to do with selective. This is a discrimination done. OMO is just for the market operations, right? Repo and reverse repo, it includes that. So, which is the correct answer then? Changes in SLR, that is also not a part. So, correct answer, I'll tell you, the very correct answer is rationalization of credit. This is very correct. This is the correct answer. Remember, some books give this A and C. Okay, that is the wrong answer. Rationalization of credit and changes in SLR. SLR is different. SLR has to deal with banks. It doesn't selective credit control deals with customers. Okay. Public finance is said to be science of taxes and spending, science of demand and supply of money, science of money and cost, science of income and expenditure. Okay. So public finance means what? Public finance. Yeah. Science of what is I'll give you the example of this public finance basically. Whatever the government presents the budget, that is basically for the public finance. That's a part of the public finance. Means whatever income government gets and whatever it expends on the common public, that's basically public finance. So science of taxes and spending you can call it. Okay, taxes and spending. So can this be the answer? Okay, see here, this can be the answer. A can be the answer because taxes is what? Income, and spending is what? Expenditure. Okay, done. This can be the answer. Now we'll check the answers which are correct. Okay, science of demand and supply of money. This has nothing to do. Demand and supply is a part of monetary policy. Okay, and this is a part of fiscal policy. Remember, this is a part of fiscal. Okay, fiscal policy, and this is a part of monetary policy. Okay, monetary. Okay, so this is a part of monetary policy and this is a part of fiscal policy. Okay, so this is out. A can be the answer. Science of money and cost, again this has nothing to do with the fiscal policy. Money and cost, it's a part of monetary policy. Not even monetary policy, it's a part of money part actually. Okay, means the money and various theories of money. So this is also out. Now last part, science of income and expenditure. Now this can be the answer. See here, A or C, which is the most appropriate answer over here? Either A or C. Okay, not C, D, sorry, A or D. So A or D, which is the appropriate answer here? I'll tell you the appropriate answer is D. Why? Because here spending is there, expenditure is there. Taxes and incomes, here its government income is not only limited to taxes, it is limited to other things also. What are the government incomes? Here there are two types of incomes of the government. One is revenue, second is capital, right? Revenue has again two parts, tax and non-tax. Tax and non-tax. Oh, let me write it properly. Non-tax, right? Tax and non-tax over here. And in capital income we have again three parts. What are the parts? Two parts basically, debt and non-debt. Debt over here and non-debt. Okay, so follow non-DBT. Okay, let me write it. These spellings I always make a mistake. Non-debt. Okay, so remember, the revenue is what? Tax and non-tax. Capital is what? Debt and non-debt. So income does not consist only of tax. So that's why D is the most appropriate answer, because tax is just one part of the income. Okay. One of the distinctions between public finance and private finance is that, so public finance means what? Of the government, and private finance means of private you and me. So what is the answer? I'll tell you. Now again there are mistakes in the books given in various notes and various things. Okay, the state adjusts income to expenditure while an individual adjusts expenditure to income. Means what? Understand this. State first decides on expenditure, what is the expenditure required, and then it goes to income. Means it brings the income as per the expenditure. And what about the individual? He first decides on income and then he goes to expenditure. Means how much will I spend? I'll spend what I earn. And what about the government? Government does first, it decides on the spending and then it goes for the income. Now this answer is given as correct in many of the books, but I'll tell you what has happened of Sri Lanka, what has happened of Pakistan, what has happened of South African countries. They did the same logic. They adjusted income to expenditure. Means first they decided on the expenditure, then they decided on the income. So that is the wrong way of doing. Okay, this is not the correct answer. Many books give this as correct. It should not be the way, and government doesn't work this way. So this straight away you mark this as wrong answer. Okay, so correct answer, let's see. The state maximizes the general welfare of the public while an individual maximizes his own satisfaction. Okay, B can be the answer. C, state has no coercive powers while individual has. That's correct. Coercive means what? State will keep on beating you to pay the taxes. So will the government put a hunter on your head? Yeah, it does if you have a high income. Okay, but it's not like the old zamindari system. Right? But the state has the coercive. Here, no is not a correct answer. It does not apply to common public. It applies to if you have a high income and you don't pay taxes, or if you earn anything and you don't pay taxes, then this applies. So this is also this is also not the right answer, because state has those coercive powers. Okay, but it does not implement it on every citizen. State cannot borrow money while the individual can get loan. That's a wrong answer altogether. State can borrow money. State can definitely borrow money. How does the state borrow money? State means what's here? State doesn't mean Maharashtra state, Tamil Nadu. No. State means country as a whole. The word state in economics is used for the country as a whole. Okay, so the country cannot borrow. Country can borrow money from either through loans on PF, on small savings, on the bonds. Okay, it can buy. So D is also not the answer. So correct answer is B. Remember, in books, many of the books they give A as the answer, but that is not the right answer. The correct answer. See here, why does the government prepare all this budget and everything? Because it's for the welfare of the public, isn't it? Why do you earn your money for your own satisfaction? Quite logic, isn't it? The tax which takes away the higher proportion of one's income rise is termed as. Now higher proportion of one's income rise is known as what? Proportional, indirect, regressive and progressive tax. Anyone? See here, I know many of us don't deal into this level of taxation, but I'll tell you the answer. If anyone knows, kindly type it fast in the comment section. Yes, the correct answer is D, progressive tax. What is this progressive tax? See here, income levels. What are the tax slabs? We know only 3-4 tax slabs. Up to 5 lakhs, then 5 lakhs to 10 lakhs, 10 lakhs to what that or further up to 1 crore max, let's say. But there are higher income earning persons, means their income goes from crores to Arabs. Okay, what about those? For those, government has prepared a separate taxation system, and that is called as progressive tax. Huge taxes for them, huge. Okay, you can't believe. You can check it on Google. What is progressive tax? Okay, and what are the progressive taxes for the higher income groups? Okay, so okay, let me show you if this is possible live over here. Progressive. See this progressive tax. I'll show you live over here. Okay, one sec. See this progressive tax. Progressive tax is based on taxpayers' ability to pay. It imposes a lower tax rate on low income earners than those on higher income earners, right? Those who have higher incomes will be taxed hugely. Okay, so now these were the questions, 10 questions for cracker series, so follow them. And before going, I would suggest, see this on we are running the batch of CAIIB, so go for this batch immediately. How to go about it? Let's see. I'll show you live over here. Go to Adda 24/7, click on JAIIB and CAIIB. On JAIIB and CAIIB, you'll see the JAIIB CAIIB Mahapack and November December English batch. You can go for either of these two. Okay, Mahapack means what? Has anyone amongst you bought the subscription of this Netflix or Hotstar or any other OTT. So that this is OTT. Means what? What happens in that OTT? You buy the subscription for let's say 1 year, and whatever comes on that channel for 1 year, you'll get this get to see all the videos, all the serials over there. Same logic is over here. You buy the Mahapack and you'll get all these classes as well as other classes which will come up within this specified period for which the Mahapack is there. Okay, it's similar to OTT. So go for that. I would always suggest go for Mahapack. Okay, and this is the English batch. Okay, this batch I'll show you about this English batch. See this. This batch, the fees is 17,999. Okay, you'll say the fees is huge, sir. Okay, let's see how to get the discount. In this fees, click over here. Yeah, see this. Now you'll see all the details of this batch. 120 plus hours of live interactive classes of ABM BFM. So everything you can read it at your length. Okay, so now look at the fees, 17,999. Click on view offers. Once you click on view offer, see the code. Put the code Y432. Okay, click apply. Once you click on apply, see this fees, 80% off is going on now. 80% means 17,999 fees reduced to 3,599. Means such is the discount level you are getting. So grab it as fast as possible, because this is an investment for lifetime. Once you clear CAIIB, in how many months will you recover this? Max to max 4 months. Okay, so grab it immediately. Okay, I'll stop over here. Tomorrow I'll be back with another MCQ series. Okay, keep studying till then.